Hello and welcome to a brand new show of Markets and More. And today we'll talk about markets and elections. Normally we always talk about what will happen rather than what has happened. But today we'll talk about what has happened. Imagine if you have a time machine and you go back to 2014. 2014. We are in 2024. 2014, well, India was struggling. We were using words like policy paralysis. The power sector was broken down. Banks were going through a universal mess, so to speak, at least the PSB banks. The corporate sector was not spending, and for a lot of Indian corporates, debt was a huge problem. Fast forward to 2024, where we stand right now, from fragile 5 to top 5. Earning momentum strong. Government balance sheet super strong. Capex at an all-time high. And you can not only feel the new India, the world is now talking about participating in the new India. So what is the way forward for us? What should markets expect from election? And more importantly, from Modi 3.0, what should market expect in terms of themes, ideas, and the narration? Now let's take that conversation forward with none other than Sunil Singhania. Sunil, good morning. Thank you for joining us. It feels unreal, right? I mean, 10 years ago, where we were versus where we are right now, touch wood, but it is absolutely a dream scenario.
No, I think you are right. I would say that the world was also struggling. India obviously had its own issues. So post the Lehman crisis in 2008, I think the world was actually struggling to come back on its feet. Indian corporates also had issues with debt, currency swings, and so on and so forth. And as you rightly said, capital, both equity and debt, was very, very difficult. I would say kudos to the government, to the leadership, as also to Indian corporates for digging it out, getting their feet back on the ground. And I think as we speak, despite what we have seen over the last 4 years in terms of one-off kind of, once in a decade, once in a century kind of challenges like COVID or the Russia-Ukraine issue or multiple other geopolitical issues or even Credit Suisse kind of an organization going up, I think the Indian corporates have got their act together, have got the balance sheets in order, and along with it, we also have a government who is very resolute in turning India into a developed country. So I think, as you rightly said, it's a great kind of a scenario, and we are all lucky to be enjoying the fruits of it.
Which are one or two high points which do you think have surprised the market in terms of how the economy has moved? Is it infrastructure? Is it digital? Is it the SIP culture? What to your mind are the high points?
So I think the first thing, Nikunj, is that the entire country, each and every of us, entrepreneurs, the government, everyone now believes that we are a great country, and we are a country which can grow the fastest in the world. I think that self-confidence is the biggest driver. Everything else is I would say, a subset of that. So as a nation, we believe in ourselves. When you go abroad, the world believes in ourselves. The respect which we are getting is like the best ever. And with respect also comes the ability of raising capital from all segments, whether domestic or globally. So I think I would say that is the biggest thing. The second thing obviously is the consistency in leadership. We don't know what the election results will be, but the way the indications are, and as you rightly said, it would be a third term. I think that would make the country as well as the leadership maybe the only country and the only leader in the world with a 15-year kind of a continuous reign. And I think that also lends stability to the I would say the policies. And last but not the least, everything which you mentioned, whether it is focus on manufacturing as far as India is concerned, getting the financial system strong, and which is now very, very strong, with public sector banks also having the ability to lend. You have the global giants across segments looking at setting up base in India. You have, because of the PLI scheme, electronics, including the cell phones and iPhones being manufactured in India. We are now having a semiconductor policy, and the first project by Tata's has already been announced, and many more are going to be announced. And as you mentioned, infrastructure, I think last year budget we had 10 lakh crores of allocation. This year we had 11,000 crores. Even if you increase the allocation by 10%, over the next 5 years, you're going to have a good 65 lakh crores worth of infrastructure spend, which is almost $800 billion. And incidentally, it is much, much more than what we have spent as a nation over the last 77 years put together. So I think it's I touch wood, nazar na lage, but I think things are pretty decent on the economy front as we speak now.
Sunil sir, if one really talks about Modi 1 or 1.0, it was about repair, it was about getting things back into motion. Modi 2.0, huge capital expenditure, digitization of the economy, and it was really about getting India's Atmanirbhar model right. So how do you think Modi 3.0 would be, and how different it could be, and from a market standpoint, where should one invest?
You're right, Nikunj. The first 5 years went into repairing a lot of things. You had particularly the banking issue. Everything else was pretty okay, but banking issue was a big thing. I think we got our act together. We experimented with some things, GST and DMON and a lot of other things. There might be debate of what has worked and what has not worked, but those were necessary steps. I think the second 5-year term, unfortunately, we lost 2 years in COVID. But if you see the last 2.5, 3 years, I think things have been very revolutionary. Whether you take infrastructure or whether you take even, all the steps mentioned in terms of PLI infrastructure and so on and so forth. As we speak, I think the base is set. The country's finances are phenomenal. Fiscal deficit is in control. India's inflation is in control. Current account deficit is now less than 1%. There is confidence in the country, so you're getting capital from the domestic investors. Global investors are looking at putting in and pouring in huge amounts of capital into the country. The government and the Prime Minister is very clear in saying that the goal is to make India a developed nation over the next couple of decades. We are talking about doubling of the economy in the next 7-8 years. So I think what happens is that this $3.7 to $7 trillion in terms of the economy size will be very different. The quality of life will improve, the quality of infrastructure will improve. The characteristic of the country will also undergo a change in terms of manufacturing being there, world-class infrastructure being there, many more airports, many more roads, many more metros being set up. And as I said, entrepreneurs in India are now very confident. There is an opportunity to tap the domestic market, and now we are also seeing opportunity of becoming a global sort of a destination as far as imports is concerned. So, whether you call it the China +1 or Europe +1, I think Indian manufacturing is also seeing opportunity to tap the global markets. So, next 5-7 years to that extent is going to be very different, where the traditional, it was only a one sort of a, one horse pony, in the sense that only consumption was driving the growth in the country. Now I would say it is capex, it is manufacturing, and a lot of other new age businesses which are also adding to the consumption bandwagon.
Someone told me a very interesting term, that let's invest in EMI. And my question was that you give EMI, you never invest in EMI. And his answer back was E stands for energy, M stands for manufacturing, I stands for infrastructure. So if one has to make an EMI portfolio for next 5 years, how much of your portfolio currently you would say, given what you've just spoken about, should be in energy, manufacturing and infrastructure?
Frankly, I don't want to complicate things. I am investing only in I, which is India. I think India economy is very different. It is to some extent like North America. If you look at Brazil, it's predominantly metals. Russia used to be predominantly oil and gas. In China, everything is now government owned. I think India is a very entrepreneur-driven economy, and there are going to be opportunities across the board. Yes, there is definitely new energy. I would say new energy, which is renewable, solar, hydrogen, which is going to be big. And you can mind, India has been one of the biggest importers of fossil fuel, predominantly crude oil. I think the way things are moving, and if really hydrogen becomes a success, It is possible that over the next 2-3 decades, India's dependence on imported fuel might just go away. India is endowed with large landmass. India is blessed by having good sunshine, maybe 11 months a year for 10-12 hours a day. Even if 1% of India's landmass were to be used for generating solar power, we would be self-sufficient as far as our energy needs is concerned. And obviously with this innovation in hydrogen, if it succeeds, then all the problems of storage and transportation of energy will also be solved. So I would say in energy, focus on solar, I think it's going to be a big thing. Manufacturing, obviously, yes, there is a huge focus, and we are already seeing it. From a net importer of mobile phones, we have now become net exporter of mobile phones. Almost all electronics to some extent are now manufactured in India. We are hearing about EV manufacturers setting a base in India. I mentioned semiconductor, the first fab unit, the groundbreaking has already happened. There are many more on the verge. And, across you are seeing all, multinational companies looking at India as one of the sourcing bases. So manufacturing, yes. I think infrastructure, we are an infrastructure deficit economy or a country. We have 150 airports, out of which 75 have been built over the last 10 years. Whether this 150 can become 300, 100% they can. There are almost 55, 60 cities where metro work is going on in some parts of in some bits and other. We have this huge focus on railways. It is expected that next 5 years, almost 10 to 12 lakh crores will be spent on railways. We have seen the fruits of Vande Bharat being run and how people are loving it. The first bullet train, hopefully, between Mumbai and Ahmedabad should be up and running in the next 2 years, which should encourage many more cities to be connected. So infrastructure, if the country has to grow to 7 trillion and beyond, I think there is going to be a focus on infrastructure. So I'd agree with your EMI term, but I would say that India itself presents a huge opportunity, and because of this huge entrepreneur spirit, there will be opportunities across segments.
Sunil, we put out some simple data, which is in last 10 years what we've seen. The index, which is Sensex, has gone from about 25,000 to current levels of 75,000. We've seen massive wealth which has got created in Adani group of stocks. We've got massive wealth which has got created in PSU stocks. Massive comeback has been there in some of the defense, railways and capex themes. If somebody just kept it very simple, that you bought good stocks and just sat on them from 10 years irrespective of world, COVID, markets have been very rewarding. So for next 5 years, I'm using 2024 to 2029 as a time period. What is the best way to maximize wealth? Because if serious wealth will get created, how can one maximize an individual's wealth journey?
So Nikunj, if you keep things simple, things multiply, So you mentioned Sensex tripling in a matter of 10 years. It looks huge, but it's like 11% CAGR. Funds have grown 15, 18% CAGR. I think this compounding is what basically leads to creation of huge numbers, So if you were to generate 14% return over the next 5 years, the markets will double. If you increase it to 18%, the markets will double in 4 years. I think we are in a stage where, yes, everything is fine. But valuations are, I would say, fair. They are not cheap. They are not overly expensive. I think we are at roughly around 17.2 times FY26, which is maybe 5-6% higher than the 10-year average. So from our perspective, what we are banking on is the fact that corporate earnings can grow 14-15% over the next 4-5 years. And even without PE re-rating, I think we can have that kind of returns from the index per se. Obviously, there will be some sectors which will do very well, some which might not participate. But we come to know about all these in hindsight, I always give this example, 2023, there was consensus that banks will do well, and they did very well from a profit growth perspective. But the returns from large private sector banks was almost zero. So it's only in hindsight that you realize that, this sector has performed, this has not performed. But as I mentioned earlier, India presents a very unique opportunity because it's a very diversified economy. We have so many listed companies. The spirit of entrepreneurship is like thriving like never before. And for a change, you also have technology, very well-educated kids returning back from overseas and setting up base in India. You have support from the government. You You have support from the financial markets because equity as well as debt is available in plenty. So I think the next 5 years, if you keep it simple and if you just be positive, and disregard the near-term concerns which keep on coming, I think you are in a pretty decent state. Yeah, and if you see last 3-4 years, we have had multiple events which has caused our confidence to sort of be rattled from time to time. In March, like a month back, you had this mid-cap and small-cap issue. Before that, you had some other issue. You had in October a meltdown because US 10-year yields had touched 5%. Before that, you had the Credit Suisse issue. You had one Indian corporate which was under scrutiny, and so on and so forth. So I think this short-term sort of swings up and down should not rattle the confidence. So be positive, and I think there is going to be good, decent wealth which is to be created. The only one thing which I would like to mention is that please don't try and maximize your return on us every single day. I think the rotation among sectors, rotation among stocks is like crazy. It is very difficult to keep pace. And more often than not, we get sucked into buying something after the prices have already moved up much beyond fair value. So you have to be patient. You have to not, I would say, deviate from your stated disciplined approach. And you have to have, expectations of decent returns, not extraordinary returns. And if you just keep this simple, next 5 years are going to be glorious.
Sunil, so why are small and mid-cap stocks trading at a premium? It is believed that small and mid-cap stocks, they should command discount because large-cap companies are better. They have better capital allocation, better efficiencies. If I could say in Hindi, Ganga to ulti beh rahi hai, kitne samay aur bahegi?
I think there's a notion that all large companies have great efficiency, all large companies have great corporate governance, and so on and so forth. And it's also not a right notion to put all the mid and small caps in the same basket, saying that they have bad capital efficiency and they are not good management. I don't agree with that. In fact, some of the smaller companies are managed by entrepreneurs who are like way beyond what you can see. And in fact, some of the large companies, particularly the multinational companies, have time and again shown that their corporate governance has a long way to go. We have seen companies in the private domain as well as on the listed space. You have seen now issues where what they are giving to Indian consumers and what they are giving to the developed nation consumers as a difference. You can't treat India as a second-grade thing. You have massive royalty which is being given. So I think this is a notion that large companies are good, great, and smaller companies are not great. Having said that, I completely agree that there is a section of the mid and small cap where there is over-exuberance, where there is to some extent significant overvaluation. And I think that will always happen. Markets are never fairly valued. They will either be overvalued or undervalued from time to time. And it is upon the investor to, as I said, have a discipline and not get carried away just because the price is moving. But to generalize, I don't think it's the right thing. The other thing is, smaller companies are driven by entrepreneurs. If you're able to find good entrepreneur and a segment which is growing, I think the smaller companies will always have potential to grow faster because they are nimble and they are in segments where the growth rate naturally is much higher than the matured segments in which the larger companies would operate.
I'd like to draw your attention to PSUs. They really have been the darlings for the market. I'll keep PSU banks aside, but if I look at metals, power, defense, railways, that's how you would look at PSUs. Metals, power, defense, and railways. What do you like within PSUs? And where do you think there is serious wealth creation which is still left?
No, so to be fair, we have missed definitely the defense side of the PSUs, and our view was that a single buyer and obviously very long gestation, but maybe we are wrong. I think stocks have really surged. Now, whether they are overvalued or not, that is, for some investors to figure out. But we still are positive on the power as well as the public sector banking side. I think that the valuation gap compared to some of the private sector peers is still very high. And the quality of their earnings, the quality of the return ratios, and the management now are not as questionable as they used to be earlier. In fact, we are moving to a scenario where they have started getting comparable to their private sector peers. So I think these two spaces on the PSU side are where we still have investment. But to be very honest, we have missed definitely the defense side.
Why do you like PSU banks? Do you think, I mean, history has taught us that they do well in periods. They've never maintained structural growth. They've always, the growth for them is very patchy.
So, what you're saying is right for the last 10, 12 years, but we started the show with saying that we have transformed as a nation, we have transformed as a country, and I think that transformation makes us believe that the processes which has been set now are long-lasting processes. The efficiency has increased, the brands which the PSUs and the trust which the PSUs have among the population is very high. And we have seen how some of the private sector banks have been hauled for their practices, whether rightly or wrongly. So I think that the difference in the valuation between the private sector and the public sector has narrowed, and there is still room for narrow. I think some of the second-tier public sector banks are still trading subpar or just at par compared to the book value. They're still trading at like 6, 7 PE multiples. There is still a 15% growth in terms of profit, which these banks are basically able to demonstrate on a sustainable basis. So I think there is still merit in expecting slightly better than the sector returns from this pack.
Sunil, markets, they always follow a theme, and you know this more than anyone else. There's a time when quality at any price did well. Last 12 months, PSUs, irrespective of which business they are in, as long as they had a nomenclature PSU, they've run rather well. There was a time when IT did rather well. So what to your mind could be that overarching theme for next 2 or 3 years, which in a sense is just getting ready to explode?
So Nikunj, first of all, themes obviously work, but themes which are very obvious, like railways, defense you mentioned, electronic manufacturing services, smaller PSUs, they are already like crazily moved up. Maybe they might move up further, but on valuation perspective, I think there is maybe a little bit of merit in holding back further investment there. Obviously themes are great, and themes, if you get it right, are going to be great investment sort of decisions. Like we mentioned, I think solar can be a great theme. Infrastructure is a great theme, but obviously you have to be very sure about the companies you invest in. But I would say that the overarching theme is Indian economy growing from maybe 3.5, 3.7 trillion to 6, 7 and beyond. I think the overarching theme should be that this is a country where if the GDP growth continues at 6.5%, 7%, which is very likely, then corporate profit growth can be 12, 13, 14% over a period of time. And I think if you just keep it simple and focus on not getting carried away and not making too many mistakes just because you want to make the maximum returns by following trends and themes rather than valuation, I think you will make decent returns. See, ultimately, Nikunj, over 10, 20, 30 years, the theme which has worked well is that you invest in companies which have discipline in terms of capital employed, discipline in terms of return on capital employed. So I think, we focus only on companies which have a return on capital employed / ROE of at least 14, 15% and above. We focus only on companies where there is profit growth of at least 14, 15%. And we focus on companies where valuations are in our favor. I think if we are able to do that consistently, then we are sure that from a 10, 20 year perspective, a lot of wealth will be created. And we have seen that, funds have gone up 100 times, 200 times just by compounding at 20%. And if you are looking at making short-term, very fast money, then, frankly, I don't have an answer. But then you have to keep on changing your preferred themes maybe every week or every month.
Well, earnings and a lot more, so let me welcome on.
If you like this video, then like, share and subscribe to ET Now.